Newmont Mining, the largest gold mining company in the world, just released their earnings report for the first quarter of 2025, and we will take a look at it here together. And to take it away, I was a little bit disappointed. There's still amazing numbers overall, especially if you look at it year over year. Still crazy valuation, in my opinion, for this kind of performance that they have. But what disappointed me that we saw a decrease in production. But let's talk through the results in details today together in this video. All right. Let's talk about Newmont Mining's earnings. If you've seen my previous video on this company, you know that Newmont is the premier player in the gold mining industry sector. Some of the best jurisdictions, the largest producer, the largest reserves. So really the biggest player. And if you're not under a rock, you know that the gold price has been skyrocketing over the last couple of months and has been at close to a record high of 3,500 US dollars per gold ounce. So pretty favorable market conditions for the company with the largest production and the largest reserves in the industry. Let's see what they actually reported. So first of all, we take a look at the investor presentations. We see a couple of the highlights. And we see that they delivered in the first quarter 1.5 million ounces of gold. And what we will see throughout the results is, of course, they will highlight their record first quarter, which is true. They had a really impressive first quarter, so generated a record first quarter free cash flow of 1.2 billion, which is very impressive, and exceeded targets. And what we will look at is compare quarter over quarter, but of course year over year, amazing performances. Looking at their mines, so some of their projects that they have going on, making good progress. So in the previous video we talked about how they're actually just still in the process of creating synergies and bringing up to date all the different projects they acquired through their previous acquisitions of Goldcorp and of Newcrest Mining in Australia. And the results are pretty impressive. So we have 2 billion in cash of operations, 1.2 billion in free cash flow in the first quarter. And here, very important, the gold all-in sustaining costs and the average realized gold price. So I said the gold price briefly touched 3,500 currently, but of course we were looking at what were they able to achieve for their product in the first quarter, so from January to end of March. And we see here they managed to achieve a price of $2,944 per ounce. And now we compare this to their cost, because that was always the bear case for them, that their costs are too high. And let's look into gold all-in sustaining costs of $1,651 per ounce. So just immediately right there you see a pretty almost, not close, but almost 100% profit margin, which is pretty good. Pretty good industry to have, pretty good circumstance to have for your business. But these are good numbers, and I hope I didn't sound too critical. But and I think it's always interesting to also look at the projects, like where are they actually their mines, and which mines are they actually closing down. So they have some big projects here that they're closing down or that they divested, so they're selling to other producers. But they will remain the biggest player in the industry. They received a very big amount of money for those divestments that we see here. So they've sold some mines or closed some mines down. And I think, yeah, that has a lot of benefits, of course. So they can reduce debt and they can increase share buybacks, increase potentially dividends, which they haven't done, to their shareholders. Or you can see it critical, like I wish they would do a little bit less of divestment, but that's a strategy question. So I think what they want to do, they really want to focus on a really good selection of what they call first tier mines. So they really want to focus on the best mines that they have. And let us, after maybe taking a look at the presentation always highlights their perspective. And maybe to round it off, let's hear what the CEO had to say about the first quarter of Newmont Mining.
Newmont is off to a strong start in 2025, closing out our first quarter with results that are firmly in line with our 2025 guidance and our broader strategic plan. Building on last year's momentum, we generated record free cash flow from safe and stable operational performance. We further strengthened our balance sheet by reducing debt, and we maintained our commitment to returning capital to shareholders through a predictable dividend and continued share repurchases. We also reached a very exciting milestone this month to support the rationalisation of our portfolio following the transformational acquisition of Newcrest. In February last year, we committed to a divestment program involving 6 of our high-quality Tier 2 operations across 4 different countries. I'm pleased to announce that following the close of the sales of Achim and Porcupine in April, we have now completed this ambitious divestment program. The program will generate up to $4.3 billion in gross proceeds, more than double our initial commitment, and has placed high-quality teams and assets with strong new owners. This program was a key...
So, I mean, maybe you already... for me, it's interesting to see what he's choosing to talk about for this first quarter results. So, what I would like to hear is, oh wow, we produced so much more gold and we made so much more profit. But if you listen to him, that's not what he's talking about. He's talking about this divestment program. And I mean, of course it's impressive. He said they made 4.3 billion and they doubled what they put into it. So they made a pretty good profit there. And we will see in the numbers that this will actually help to reduce the liabilities. So, I mean, it's good, but it's not what I want to hear personally from this company at the moment. And that's what I'm a little bit. That's why I'm a little bit critical about these earnings reports. This earnings report. Let's jump into the numbers to see what the numbers are actually telling us. And let's go through the highlights. So we see net income 1.9 billion, $1.25 per share income, and they say they're on track to meet guidance. So even though the production reduced a little bit, they're still on track, which is good. Completed the divestment program, received 2.5 billion in cash, 2 billion from operating activities, and produced 1.5 million gold ounces, and reduced the debt by 1 billion. So, these are good results. Don't get me wrong. These are good results. Let's look into the detailed numbers here. So, what's going on? Let's look into the detailed numbers here. So what we've seen before, realized gold price quarter over quarter, 2,900 compared to 2,643 in the fourth quarter of 2024. It's great. And as I said before, the gold price is even higher. So we're on track to have an even higher gold price than that for the second quarter. So that's really, really good. Now we're getting more critical. Attributable gold production. Gold production is only 1.54 million ounces of gold only. It is still by far the biggest one, but That's a lot down, actually, 400,000 ounces compared to last quarter, and it's even less than in the first quarter. So I don't like it. I would, in this environment where gold is so valuable, I would love them to see this number increasing. But of course, if you're selling mines, then it's logical that you are also lowering your production. And then the gold CAS is the cost applicable to sales, so how much it costs them, 1,272. But as we said before, more interesting is the all-in sustaining costs. So that's 1,651. Pretty big increase to the fourth quarter, which I don't really understand why, because oil prices are going down, and I don't think labor costs are increasing that much. So it would be interesting to better understand that. And let's see if they have to say something. So gold all-in sustaining costs, or the gold price of sales increased 12% per ounce compared to the prior quarter, primarily due to lower gold production, higher royalty costs, and greater allocation of costs at co-producing sites. This is an interesting reasoning. So they're basically saying their costs increased not because of labor costs or something, but because of agreements they have and their divestments. So that's not pretty good. That's pretty much self-inflicted wound, and I don't like to see it. And then we look at net income. So that increased, but that's I think a big part of it because of their income from their overall net income because they made this big money with the divestments. But the adjustable net income, we see that decreased from the last quarter, so that's not good. I would love to see them increase it. And of course, if we look at it year over year, great increase of net income, more than double it. It's still great. I think the company's still a great opportunity, but I would have loved to see a little bit more here. I would have loved to see the trend continue of increased production and increased sales. Of course, free cash flow similar. We see here we had negative free cash flow in the first quarter last year, and now we have a crazy free cash flow of 205 million. But again, same story, down from the fourth quarter of 2024. I don't like to see it. I hope they will turn it around. Let's look what they say about the net income. So they're saying it was 1.9 billion or $1.68 per diluted share, an increase of 488 million from the prior quarter. This increase was primarily driven by the gain on the sale of assets held of 276 million compared to a loss of the prior quarter. Again, so what I said is actually they made less money than they did last quarter, but they sold those assets that he talked about, and thereby the numbers look a little bit prettier. Let's look at page number 8. So here again, let's look at the gold production. So this is a little bit the worrying thing. Like we see in the last year, they had steadily increase of gold production here. And now we even producing less than we produced in the first quarter last year. So that's not good. And if we go to, of course, they also have these byproducts. They're selling a lot of copper now that you're mining with gold. But these numbers don't really interest me that much for this company. And last but not least, let's have a look at the liabilities. So the total liabilities, if we look at here, first quarter, that's pretty good. Let's take a look here at this number. Total liabilities, we decreased by 2 billion, which is pretty good. Even though it looks like interest rates could be coming down, so that's not as big of a factor anymore as it was, but still, of course, always good to see a company significantly decreasing liabilities. So at least we have that. But all right, to summarize, what we saw. We saw that Newmont has the still very strong company, very strong performance, especially considering their stock price value. So their stock price hasn't really done that much, even though they're making great money. They're having a great business model in this environment. But personally, I'm a little bit disappointed to see their production not increasing. So yeah, but we will keep an eye on it and make up your own mind. Of course, as always, let me know what you think about the company's report for the first quarter, and see you next time.